Good afternoon, everyone. I'm Liz Vibber with Bergvall Co. and the Catalyst Center for Nonprofit Management. Thank you for joining us this afternoon for the PPP Loan Forgiveness Update. It is fresh off the presses from the Senate's approval of the House's bill last night, so we've updated the presentation for that for you today. Please know that we'll be using the chat box for questions, so I will be monitoring that. And for those of you who've asked questions as part of your registration, I will also move through those and make sure that we get things answered for you. So welcome to this afternoon session, and I'm going to pass things over to Cindy Bergvall, who is your host for this afternoon. Cindy.
Hello, everyone. Thank you so much for attending, and thank you also for the Regional Free Library of Philadelphia, the Foundation Center, for getting out the word on this session and getting this together. They held another session for us earlier a couple months ago, and it's really helpful to have their support and just helping to reach other people. I am so glad that this passed last night. I knew it was on the horizon, but I didn't want to change the slides over until we knew, so I'm really grateful of the timing for this. As I mentioned, it just passed the Senate last night. The House had passed it last Thursday. So what happens is the law is passed, and then the Small Business Administration, SBA, writes guidance on the practical application about the law that was passed. Actually, the president will sign it first. He has said that he will sign this. So SBA will release guidance on how you apply what is in the act. So we have read the act, we have interpreted it to the best of our abilities. Possibly some of what we're saying in the slides will change once the SBA guidance comes out. And just as we have all along, we're continually pushing information out on our electronic newsletter. If you are not on our newsletter listing, my email address is at the end, or you can email Liz Vibber. She'll put her email address in the chat box. You can get on our email list. We also post things to our Facebook page. We'll post things on LinkedIn. So we try to get this information out in multiple venues. We're an accounting firm. This is what we do, and keeping up with this has been a pretty big haul for us. So I can only imagine, you're trying to do your everyday jobs and keep your nonprofits going, and then trying to pay attention to this on the side. A number of you on the call are not clients of Bergvall, so please check with your own accountants or your attorneys before acting on any of this advice. We are able to have a separate engagement, so if you want to stay with your own accountant for your audit or your 990 needs, you can carve out, we can just do a consulting engagement for you with respect to the forgiveness on these loans. But check with your own accountant first, and for whatever reason, if your own accountant isn't involved in this whole forgiveness and the PPP loans, we're glad to help you out with a consulting engagement. What I tell you today is only going to change, but you just need to keep in touch with it, because if you're on this call, it's most likely because you received the funds and you're trying to figure out how we can best spend the funds. So you have to keep up to date so that you can manage the cash flow the best you can for your nonprofit organization. And I know it's been really rough. All right. So what I've done is this presentation, I just changed it last night when the information came out. Anything updated in red will show you what used to be and the way it is now. So that will help you, because if you've been listening to what used to be, that way you can see what the changes are. So just to recap, the Paycheck Protection Program loan covers payroll. We will shortly define what payroll is. And it also covers non-payroll costs, such as utilities, rent, and mortgage interest. We'll also spend a little bit more time discussing those too. Your non-payroll costs, the utilities, rent, and mortgage interest, cannot be larger than 40% of the total amount that you spend. Not the amount that you borrow, but what you spend. So if you borrowed $200,000 and at the end of the forgiveness period, you've only spent $180,000, that calculation is on the 180, not on the 200,000. The biggest change, the one that we're so excited about, and that I'm sure you guys are excited about too, is you now have 24 weeks to spend the funds to get them forgiven. So if you remember, when you applied using 2.5 months of payroll. However, the forgiveness extended for 8 weeks of payroll. So there was a disconnect. So prior to this legislation passing, most of our clients were having trouble getting 100% of the funds forgiven. Now that you have 24 weeks to spend the funds, it's very likely that you will be able to spend the funds. And as we work through this presentation this afternoon, you are going to see that there are a couple add-ons to even help you, especially those of you who have not been able to operate these last few weeks, and it might be a little bit of time before you come back to full operation. We will also see that even if you spend all the money, depending on certain things, you still might not get it forgiven. So we want to make sure that we go over that part. The other thing is the forgiveness period had been 2 years. It's been extended for 5 years, but the 5 years, the way they wrote it, it's for 5 years for loans that are issued after the act passed. So chances are most of the people that are attending this session, you probably already have the funds in hand. You're still looking at the 2-year period. However, if you're on this line debating if you should apply for the loan, in your case, it'll last for 5 years. I'm curious if that will be cleaned up because it just seems like a disconnect. But the reality is, chances are you'll be able to get most or all of the loan forgiven, so it's less likely that you're going to have a part that's not forgiven. Also, if you have a part that's not forgiven, you can simply pay it back, and then there is no paying it out over a period of time. Down at the bottom here, you can see links to where this information came from, and then this is a link directly to the House bill, and this is where the information in red came from. I don't know if we want to jump in with any questions on this slide. Okay, we'll keep going. As you have questions, if we'll try to address the questions related to the slide that we're on. And so if you ask the question and it doesn't get answered right away, it's probably because Liz knows your topic is coming up later in the presentation.
We do have a quick question regarding when interest starts.
Oh, yes. Okay, good. That was changed. And the way it is structured is that the interest, it looks like the interest will not start until you've applied for the forgiveness. Whereas before, it looked like the interest would, like the interest started now, or the interest was just deferred for 6 months. Until we actually get the guidance, I'm not absolutely sure, but reading the act, it looks like the interest will not start until later on. So that's helpful as well. That's a good question.
And can you quickly clarify, is the 24 weeks that for current borrowers or only for new borrowers?
Oh, good. It is for current and new borrowers. So if you borrowed, it's 24 weeks. And it's spending the money for 24 weeks. So it's all the expenses that you would incur over the 24 weeks. Somebody had asked this morning, is it that you get to pick a different 8-week period in the 24 weeks? No, it's 24 weeks. So now you have much more time to spend all the payroll and things.
And when do these changes go into effect?
Pretty much now, like when the president signs, it will become law.
And he has not signed it yet, correct?
Not to my knowledge. If you guys are online, go to Twitter, Google PPP Loan Flexibility Program. I've gotten more news off of Twitter. It's been invaluable to me for the late breaking news.
Okay, we're good to go on.
Great, thank you. So what do we mean when we talk about payroll? So we're looking at gross payroll, and it can include bonus or hazard pay. So if you're paying your employees a bonus, or if you've had people that have still had to go out to visit clients and you want to give them a little extra, that's perfectly fine. The guidance that came out Friday, May 22nd, explicitly notes on page 11 that bonus and hazard pay can be included. If you've been in other seminars or read other things that we've done, we were always kind of cautious on that because it wasn't explicit, but now it explicitly says that you can include bonus or hazard pay. The thing you want to be careful of, though, if you're on the line from a larger nonprofit, you might have some employees that make over $100,000 over the course of the year. Those funds are capped. So before, when it was 8 weeks, the most that you could apply for forgiveness for the people over the 100,000 was $15,385, which basically calculated, the way that was calculated was $100,000 divided by 52 weeks times the 8 weeks. I suspect that that maximum is now going to be expanded to 46,000, which is what somebody making 100,000 a year over a 24-week period, they would make 46,154. So that is capped. So if for some reason you were to give that person the bonus and the hazard pay, that will not count towards forgiveness because you've already hit the cap. However, that person that you spend, that person making 100,000 or more who's capped at 46,154, that's one piece. You can also count the employer share of health insurance for that person, plus pension, plus the employer share of state unemployment. So, let's say you have Joe, he makes 100,000 a year, he's capped at 46,154. The employer share of health insurance over the 24 weeks comes out to $5,000. You can use that $5,000. So I wanted to be clear on that. I know a number of nonprofits do not have an employer share of pension, but if you happen to have a 403B plan and you do an employer match, or you decide at year end that you're going to contribute to that, that would count. For those of you with a June 30th year end who are trying to make that determination if you're going to put something towards your pension plan for your employees, that's going to fall within your 24-week period. When we look at the timing for payroll, when we were just looking at 8 weeks, that became a really big issue because people were trying to figure out, do I count the first pay period that after the money was deposited in my account? What do I do with, somebody's pay, you get near the end of the loan, but the pay date is after the 56 days are up. Now that we're looking at 24 weeks, there's going to be a lot of payroll in that middle, that whole question of what pay period are we talking about is really not an issue anymore. There's going to be pay in the middle there, even 20 weeks of pay that you are not going to have any trouble spending, assuming all your folks are back. But for many of you, that's really not going to be an issue. So now let's look at non-payroll costs. If you own the building that you're in, you can deduct mortgage interest that's paid during that 24-week time period. Most nonprofits do not own the building they're in, and they tend to rent. So if you rent the building, the rent during those 24 weeks can be used. If you have a copier that you rent, or like a postage meter that you rent, that can count as well. You can also count your utilities. Before, when we were talking about the 8-week time period, we were telling people, fill up the oil tank, fill up their propane tank. It's just, so much less of a concern because you're going to have plenty of costs, basically, is what we're looking at. If you live in property that's donated rent, then you just don't have any rent to apply to this. Your leases. Make sure you have a lease in writing. So some of you are paying perhaps, a discount on your rent because you're renting space from maybe a board member or a donor that has, extra space in their office complex, so you're renting from them. Sometimes those arrangements might be rather informal and you might not have anything in writing. Your obligation was certainly in place prior to February 15th. However, in order to get forgiveness on that rent, you have to make sure you have the lease in writing. So if you don't already have it in writing, you're going to want to get something in writing, date it from the date it was actually effective. Excuse me. And make sure you have that on file. From what I've seen, the banks are going to ask for a copy of that lease. If you have copiers or equipment, make sure you have, and you're going to use that rent towards your forgiveness, make sure you have copies of those leases as well at hand. Now's the time I would reach out and get in touch with your copier or equipment company for a copy, just so that you have it at the ready.
Cindy, we have a question regarding, can you explain what transportation is?
Yes, that is a really good question, because it was really confusing. The way I've heard it interpreted is if you have a organizationally owned vehicle. So if your nonprofit owns vehicles, the gas that you pay or the mileage that you pay, no, it's going to be gas. It's going to be gas that you're putting in those vehicles. That gas that you put in those vehicles counts towards those transportation costs. I have seen very little, like in official rating, like very little from the SBA on that transportation costs. If you don't need it to get forgiveness, I wouldn't bother with it, just because it's one of those kind of iffy things. But I know some of you have nonprofit owned vehicles and that you're putting gas in them. So if you need it, you can use it. But if you don't need it, because I haven't seen it well defined, and anything that the banks get confused about that's not well defined, they get squirrely about, which I understand completely, because they're kind of the ones that are sticking their neck out here. But if you do need it, that's what I've heard it is about. That's a great question. Thank you.
Also, can mileage reimbursement to employees using their own vehicle be forgiven?
My understanding is that they cannot, that doesn't count. The one thing I read about this, or I guess two things I read about this, said it was an employer owned vehicle. If it's something that you think, wow, if we could use it, that would really help our forgiveness, feel free to reach out to us again, and we can dig a little deeper and see if we can get more authoritative research on it. So the question comes, what do we do about measurement date? I have pretty much the same commentary that I did about payroll. I don't think you're going to wrestle with trying to get as much as you can in the 8 weeks now that you have so much more time to spend the money. But the guidance says on page 12 that you could use both paid and incurred. So the way it had been written was, this is, under the 8-week period. If in the 8 weeks you paid 3 months of utility bills, like you actually, you wrote the check for 2 months and then you incurred part of the 3rd month, they said you could include all of it. And they have an example on page 12. And they even say that they recognize that this means that you would be applying for more than 8 weeks of utility costs, but they felt that the amount was so small that it wasn't something to worry about. But like I said, I just don't think you're going to run into this issue now. So now we want to think about, there are areas where you could reduce your forgiveness. So you could, let's say you get $100,000. You could spend all $100,000 on all the things that we just talked about. You could spend your entire $100,000 on payroll, but you could still have your forgiveness reduced. And it's 2 different circumstances that the legislation is concerned about. And I want to back up and explain why. So if you think about it, this legislation was passed because at the time that this all happened, the goal was, if we can help employers keep their employees on payroll, it will reduce the number of people going to unemployment. Obviously, nobody in March, all the legislators in the middle of March, realized how long we would be in quarantine. They didn't realize it would take this long. They expected us to open up sooner. It's been much harder for people to maintain their head count and things like that. But these 2 provisions are basically saying, we don't want an employer to get forgiven for 100% of their money if they've cut part of their staff. We don't want an employer to get 100% of their money if they cut people's payroll by, if they cut, somebody's pay by 30%. The goal is that it's not just the employers being protected, but the employees and the individuals to kind of hold up the economy as a whole. So they put in two provisions to try to maintain this goal. So one is that you need to maintain headcount. And two, you cannot reduce anybody's salary or their wages, or if somebody is hourly, reduce their hours below 25% of how they were paid for the first quarter of 2020. So if you have somebody that's getting $1,000 a week under salary, you could not reduce their salary below $750 a week. If you have somebody that's making $20 an hour and they're hourly, you cannot reduce it below $15 an hour. So it's that whole 75% that they're watching. If somebody normally works 40 hours a week for you, you can reduce their hours, but you can't reduce it more than the 30 hours. I'm going to dig into headcount. I have 2 slides on headcount because there's a ton of questions around headcount. But you need to, those are 2 things. The third piece is you actually have to spend the money. So it's not like, you can do all these things. Let's say you reduce your payroll by 20%, but for whatever reason, over the 24 weeks, you can't spend, let's say you got $100,000. If you only spend $90,000, you're not going to get the $100,000 forgiven because you didn't spend that last 10. If you don't maintain these levels, your forgiveness ends up being reduced. The other thing to remember is we go back to whatever your total is that you spend. So if you spend $100,000 between payroll and non-payroll costs, at least 60% or $60,000 has to be towards these payroll costs that were on that slide about payroll. Should I stop for questions?
Yes, we have a number of questions here.
Understandable.
So our organization has 2 part-time 990 contractors. We included their time and cost in our PPP application and it was approved. I saw something saying non-W-2s could not be included. Could you clarify?
Yeah, you're right. They cannot be included. So in theory, you've received more funds than you were really supposed to receive. So I would suspect that your bank will want that back. So whatever the calculation worked out to be on those 1099s, you'll want to set that aside and pay that back to the bank. Give your banker a call now and find out, do they want the money now? Do they want it at the time? I think they won't. I suspect they won't want it until then, but you really want to make sure that you don't spend that money because that will not count towards your forgiveness. Independent contractors were not part of the calculation to get the money, and they're not part of the calculation to benefit from it. The banks had to approve things so quickly that it was very difficult for them to dig deeply. And you are one of several people where the bank missed that in the application. It's not necessarily your fault because there was a lot going on and it was not clear if the 1099s were included or not. But nonetheless, it is money that you'll need to pay back.
Another question, is training pay for new or existing employees eligible for forgiveness?
If the training pay is something that gets reported on their W-2 as part of their gross payroll, then yes. And I believe that training pay does, from the way the question's phrased. Sometimes people will be in a training period and they'll get like $10 an hour for their training pay, but their normal pay rate $16 an hour. But the $10 an hour still has taxes taken out of it and everything. So that will count.
Okay, the next question, and we have a few of them here. For the employer match, is the employer match of the simple IRA included also?
Yes.
if you spend the money in 10 weeks and then have a furlough, can we still file for forgiveness?
That's a really good question. I'm going to save that question. We have a slide that talks about furlough, so we'll talk about that shortly.
We have another question regarding employees who were terminated within the first quarter. Should we hold that one as well?
Yep, that'll be good.
Okay. Can you hire a subcontractor to be an employee?
Yes, you can. So you can, if you have somebody on a 1099, you can switch them to an employee. However, from that point on, they're always an employee unless something changes about the relationship, like they start their own business or something like that. The other thing you want to keep in mind, let's say you have 5 employees and 5 subcontractors, and these 5 subcontractors kind of do all the same thing for you. You can't say this guy's going to be a subcontractor. I don't know how well you guys can see my hands virtually. So you can't say one of those subcontractors is now going to be employee and the other 4 are still going to be subcontractors. That's not going to hold any water with Pennsylvania unemployment or the IRS. So you certainly can move some of your subcontractors to employees, but be consistent, and now they're your employee for good. So just think about the ramifications of that.
Okay, and can utility funds be forgiven if the bill was accrued prior to February 2020 or accrued prior to when the funds were granted?
As long as you wrote the check for the utilities after the date the money was deposited into your account, they should be able to be forgiven. And I'm basing that answer on that page 12 of the SBA guidance in the link before. So you can double check that link. But the way it's phrased, if you write a check after the date the money was deposited into your account for the forgiveness money, that paid date will give you that forgiveness.
Okay. We only took about half the loan amount because we didn't think we could spend it all in 8 weeks. Now that the time is extended, can we go back to the bank or reapply and get the rest of the loan amount?
I would definitely go back to the bank. Yes. Go back to the bank and see what they would recommend that you do.
Okay. And our last question before we move on, if we reduced payroll by 25%, but later paid most of that 25% back to the employee as a supplemental payroll with the supplemental, will the supplemental payroll be forgiven if it is paid to the employee by the 8-week deadline?
It will actually be forgiven if it's paid to the employee by the 24-week deadline. So yeah, as long as you pay it within that period. If I could add something to that, because I'm saying this 24 weeks, if you reach 10 weeks and you realize, okay, we've spent all the money, we're good to go, you can submit your paperwork before the 24 weeks. So you have that. So, you know, that particular question asked about 8 weeks, but you can kind of make that up as long as you make it up before you submit for forgiveness.
Okay, I think we're good to go on.
Okay, go ahead, thank you. So the question is, you know, if we looked at the previous slide, one of the things it said you have to maintain headcount. So I have 2 slides about headcount. And the second slide that we look at after this will explain what full-time equivalence is. So the first thing is when they say maintain headcount, what do they mean about maintaining it? What are you comparing it to show we maintained headcount? So they said you either show that you maintained headcount this year compared to last year, or the beginning of this year compared to this period. The period originally was defined as February 15th, 2019 to June 30th, 2019, compared to February 15th, 2020 to June 30th, 2020, or beginning of this year, January 1st to February 15th, compared to February 15th to June 30th. If you read the text of the act, it says anywhere in the CARES Act where it says June 30th, substitute for December 31st. So it looks like this is likely to change, that you're going to be comparing FTEs for February 15th, 2019 to December 31st, 2019, and then compare that to the same time period in 2020. So what do we mean by FTEs? Anybody that works 40 or more hours is just one FTE. So if you have an employee that's been working 60 hours a week overtime because you're a frontline agency and you've been super busy, that's not going to be 1.5 FTEs. It's just capped at 40. It's going to be one FTE. Then the legislation gives you a choice, 2 different choices. And this is actually, if it's not in red on the slide, it's already part of SBA's interim guidance. So this is in SBA's interim guidance that they released May 22nd. And what it says is if you're trying to figure out partial FTEs, you have a choice. You can either use it prorated, like a mathematical calculation. So if somebody works 10 hours a week, that person counts as 0.25 FTEs. If someone works 20 hours a week, that person works 0.5 FTEs. So it's the number of hours they work divided by 40. Or they said anybody, or you can just say anybody that works less than 40 hours, you can count them all at 0.5 FTEs. Either method is fine. What I would recommend that you do, if you're going to run into issues with this whole FTE thing, calculate it both ways, figure out what works best for you, and then use that method. Somebody had asked a question, and so this is perfect timing for that, because some of you right now have been busier than ever. You're frontline, you're dealing with food, you're dealing with homeless. You know, you're busier than you normally have been. Others of you had to furlough your employees. You might be a museum or a nature center. You know, perhaps it's a senior center. You could offer some sort of programming like a YMCA. You're not open for business. Even childcare centers, as much as childcare centers have been desperately needed, they still had to close. So therefore, you've furloughed your employees. Thankfully, this new guidance that was passed last night extended the date to December 31st. So you can rehire the employees that you furloughed, or if they can't come back, or for whatever reason you lay off somebody between now and then, it says you can hire similarly qualified employees for unfilled positions. If you guys are like the last 2 audiences we spoke to, we're going to have a lot of questions and conversations about this slide. I'm going to go through the whole thing and the whole process, but meanwhile, keep typing in your questions. Or if you want to wait till I go through everything in case I answer your question, feel free to wait. We will pause a little bit because this is a lot to unpack. So let's say you furlough an employee, and now, you know, you're a museum, you open up, you're ready to bring them back. You offer to rehire them, and they have, you know, their husband had cancer last year, and they say, I can't come back. I don't want my husband to get anything, so I cannot come back from furlough. Or they say, my kids still have school, or my kids don't have childcare yet, I'm not able to come back. That's actually a separate situation. We'll talk about that shortly. Or they say, with the extra $600 a week right now, I'm making more on unemployment. I don't want to come back. And that includes your part-time people. So your part-time people are getting their normal unemployment plus the extra $600. That provision is good until July 31st. Possibly Congress will extend that extra $600 piece. But for some of your folks that are kind of doing better on unemployment than they would working, it's hard for them to come back. So this is what you do. So if you take these 5 steps, the whole thing about full-time equivalents, you will not be dinged for that. So if you have, you know, 4 people are your normal, you have 6 normal full-time equivalents, you furlough everybody because you're closed, you call them all up and say, hey, we're opening, and only 4 people come back. If it gets to December 31st and those 4 people still haven't come back, If you followed all those 5 things, that whole FTE thing just doesn't matter for you. You have a free pass. It is not going to affect your forgiveness. So what are these things? You guys have probably been reading the slide and know exactly what these 5 things are, but we're going to talk about it anyhow. You're going to put your offer to rehire them in writing. Email is fine. You're going to offer to restore them at the same salary, wages, and hours, or within that 75% window we talked about. If they reject your offer, their rejection does not have to be in writing. I would recommend that you get in writing, but it doesn't have to. A verbal rejection is fine. You have to maintain records. So you're going to write down, on July 1st, Susie Smith rejected my written offer to rehire by phone or something like that. And the last part is that you're going to let the state unemployment office know that the offer was rejected. They're saying let them know within 30 days, and then there would be some sort of guidance coming as to how you would inform the office. I know for Pennsylvania and New Jersey state unemployment, for any employees that you have on unemployment, whether it's pandemic or regular unemployment, you are getting correspondence from the state office once a month saying, is their job open yet? And you're either saying yes or no. I think the question also includes, have you been able to restore their hours? So you can still, as soon as you say, yes, their job's open again, I've offered to come back, you've done this, you've informed the state unemployment office. So if you offer somebody to come back for you to their full-time hours and they reject it, you'll want to let them know that the state unemployment office checks with you every month, and you have to answer that question truthfully. I know for some of our clients, if the person's home and their husband has cancer and they're on unemployment and they say, well, I can't come back because I really don't want to expose my husband, legally you're going to have to say, offer them that they didn't come back, so it could jeopardize their unemployment. Like, out of the kindness of your heart, you might want to say, yes, I wish you could stay on unemployment, but you just really can't. That's just the nature of the beast. So that's the situation. The other exception that they added with the legislation, which is really helpful. So let's say you have a museum and you normally have 10 employees. Your museum's going to be open July 1st, but now you can't have the same number of people come to your museum because you have to spread it out. Whatever comes out with safety legislation, it says, you have to cut in half the number of visitors that will come to your museum. So when you look about bringing your people back from unemployment, you might say, I don't need all 10 people anymore. We're not going to have as many people using our museum, or maybe you have abbreviated hours, whatever your situation is. If there are safety requirements that are imposed by OSHA or the CDC or all the different agencies that are governing how we're returning and what social distancing looks like, if you can prove that because we are complying with these safety requirements, we couldn't hire back these people, that's not going to count against you either. So, what questions do we have?
So the question we have is, our organization's FTEs are at 37.5 hours per week. Would this also need to be prorated?
Yes. So you would just use like 37.5 for your FTEs and then, divide your hours worked accordingly.
Okay, and we had a resignation on 5/31, May 31st. Will this affect us as we look to refill the position? What kind of a deadline might apply here?
Good. You're good until December 31st. So somebody resigns, you can rehire to get your head count back up by December 31st.
And if the majority of your employees work between 20 and 33 hours a week, would this be considered a 0.5 FTE?
Correct. So you could either use 0.5 or you could do 0.5 for the 20-hour ones and 0.6 or 0.7 for the higher ones, or you could just do 0.5 for everybody and be done with it.
And just to clarify, you must spend at least 60% on payroll or none of the loan will be forgiven. Is that correct?
That is my understanding. So that is like, that's kind of an all or nothing provision. If you don't spend at least 60%, you jeopardize all of your forgiveness. There's no like, if you don't meet the FTEs or you don't pay somebody 75%, there's this fractional reduction of the forgiveness. But if your payroll has to be at least that 60%. You know what? Let me back up a little bit. Think about it this way though. Let's say it just means that you can't spend the money. Do you know what I mean? So let's say you get $100,000. Your payroll comes up to 50,000. Your other expenses come up to 50,000. You're not going to get, it's not going to be that you're going to submit that and the bank will say, nope, you can't get any forgiveness, you're done. What you would do is you would say, okay, payroll's 50. I'm going to reduce my other expenses just to make the ratio work out. And I can't figure it out in my head, but let's say it's 30. So 50 and then 30. So it would just be that you wouldn't get the 20,000 forgiven. You know what I mean? You would just reduce your other expenses to make it work. It wouldn't be that you wouldn't get anything forgiven. So in one respect, it could be all or nothing, but it would only be if you submitted your application incorrectly. You can easily fix things to make it work so that you can get forgiveness. You just won't get forgiveness for the whole thing.
Okay, and we received the fund in the first round and now have used the funds. We are looking to furlough or lay off some staff. Do we need to have all back 100% as of 12/31/20?
That is my impression right now. I have seen some things saying that if you're done and ready to go, you can use the 8-week period. You don't have to say we're going to use the 24 weeks. But so my question, the question that I don't know the answer to is if that's the case, I don't know if you get to use the June 30th date and lay people off after June 30th, or what that looks like. So hopefully, when the guidance comes out, that will be clearer. So keep an eye on that. When I say, when the guidance comes out, it's going to be about, I suspect it will be about 3 or 4 weeks before we get guidance from the SBA on these changes. It could be shorter, but it takes a little bit of time for them to work through all the things with this.
And do we anticipate that the loan forgiveness application will change as a result of?
Definitely, because the old application is written with the 8 weeks and all the calculations relate to that. So yes, it will change.
Okay, and one more question. Do the loan proceeds need to be segregated in a different bank account, or is it okay to commingle them with funds from operations?
Is this our last question?
It is.
Okay, then this is
as of right now.
But, do you arrange these so it leads to the next slide easily?
Yes, I do.
That was a good question. So the application is here right now. So some of the things you might be wondering about, even though we know that the application for forgiveness will change, you can still pull it up. So you are not required to put in a separate bank account. We've recommended that. We just think it'll be easier to track the money that you're using. One of the things that we're concerned about as an accounting firm is that if you put it in your operating account, would you accidentally use it on things that you weren't supposed to and not realize it, and then all of a sudden you're in the hole? I mean, it's just been, the weeks are going by and it's a crazy time. So from that standpoint, just for control, put it in like a savings account. You don't necessarily have to open up a separate bank account, but you could put it in an account other than your general operating account. And then as you're using the money, write yourself a check to cover those. people ask, what kind of documentation do I need? There's a list on the application form of what you need. Different banks might ask for more than what's on the form. We saw that with the original application for the loan. So be mindful that your bank might want a little bit more. If you use an outside payroll company, they have been staying on top of this, and they're setting up forms with the goal that when you're done and ready to apply for forgiveness, you're going to generate the forms that your payroll company put together, and those would be things that you could submit to your bank to satisfy that documentation. Projecting out and monitoring forgiveness. We had clients that were monitoring this kind of, week by week or every other week because there was a big concern, how can we make sure we maximize our forgiveness? Now that you have more time, it's not as much of an issue, but I would still, like, if you've had the loan, if you were one of the earlier people, I would double check and see where you stand right now. And then maybe in 3 or 4 weeks, check again. You're trying to make the best decisions that you can right now in an environment that no one has ever had to operate before. So, just stay on top of it and make sure that what's actually happening with the expenses that are eligible for forgiveness is really happening.
So we have some more questions. Lots more questions. Are you saying that a 25% reduction in headcount is allowed without jeopardy to loan forgiveness?
No. Thank you for clarifying that. So there's 2 different things. One is headcount, and you have to maintain headcount at 100%. The other is what you're paying each individual. So each individual is this. So one thing is headcount. The second thing is what you're paying each individual. So each individual's salary or their hourly rate has to be within that 75%.
Okay. And we included some non-W-2 payroll expenses in our application. With the expansion to 24 weeks, we can now easily spend 100% on payroll. Is that eligible for forgiveness?
No, I think you're in the same situation as the person with the 1099 situation. So there were things in the application, and then so you got more money than you should have. So you're going to need to pay that back.
And is payroll paid after the receipt of the loan proceeds, but incurred prior to the receipt of the loan proceeds forgivable?
It is, yes.
Okay.
There's this whole measurement date that the guidance talks about, but currently under the current guidance that's out there, then you'd want to be consistent. So you'd always be, if you're going to use the paid date, like the check written date, even though you incurred the payroll beforehand, then all your forgiveness will be based on the check written date as opposed to the incurred.
And if we have more part-time employees than full-time employees, will this be a problem for forgiveness?
It should not be, but you're going to be looking at, so you might have 2 FTEs at 2 40-hour people, but then everybody else, you're making this calculation for everybody else. And so you'll want to decide, should I count all my part-times at 0.5, or is this better? And depending on how things were for you in those measurement periods, make both calculations and see which one is the best.
Are staffing agencies reimbursable?
No. The fee that you pay for your staffing agency is not reimbursable. Also, like your fee for ADP or something like that, like if you pay the fee for your payroll to be processed, that's not reimbursable either.
And if I terminate an employee on July 1st, is loan forgiveness allowed as long as I refill that position by 12/31?
That's correct.
And what about accounting paid for payroll expenses?
That is not forgivable.
Okay, I'm just looking through some of these other written questions. Okay. Okay. What is the best way to post payments against a loan in QuickBooks?
Ooh, good. So from an accounting standpoint, when you get, let's say you get your $100,000 from the bank, it is going to go in your loan expenses as a liability account. Your other expenses that you're hoping to get forgiven, they're going to go in the normal expense accounts. If you're using QuickBooks, this might be an opportunity to use the class feature. You know, if you want to use QuickBooks to keep track of it, and you could keep track of it that way. I've also seen people recommend QuickBooks has a customer job feature, so you could use that as well. And it's a way that you can carve those things out. You don't necessarily have to track your expenses in a separate bucket on QuickBooks, only if it's helpful to you. Because the expenses are forgivable over a certain time period, it might be easier just to run your QuickBooks expenses for your utilities from, you know, start date to end date, as opposed to, you know, carving them out as forgivable. So that's one part of the answer to the question. The second part is, once you find out what part of that loan is forgivable, you know, you borrow $100,000, $90,000 is forgivable. The $90,000 is going to go on your income statement as other income. And then the $10,000 will either stay as a loan if you want to pay it, if you want to keep the loan, or if you pay it back, it'll just go out. I would classify any forgiveness amount as other income as opposed to in your revenues. So if you think about the way your income statement looks, you have revenues and expenses, and then, you know, your profit or loss. And then I would put the other income below that. That way you can still keep an eye on, you know, how did we really do for the year before you add back in that forgiveness.
Okay. And should the loan forgiveness application wait until after December 31st, 2020?
It might have to, because if you're rehiring, you know, if you're going to fall under those exceptions. So if you're doing some of this rehiring, it will have to wait, because you won't be able to meet those exceptions until you've kind of made yourself whole. If you do rehire the people and restore their wages prior to December 31st, or you've used the funds, you can certainly apply for forgiveness prior to that date.
Okay. And when does loan repayment start for amounts not forgiven?
It would start from the time that forgiveness, from the time it's determined that it's not forgiveness, that's when they'll start. Because prior to then, they don't really know, you know, if you do owe anything. So once that's determined, your payments will start. It's a term loan, so it will term out over the remaining months and that remaining period. So as you can see from this time frame, let's say you apply for forgiveness, you know, right around December 31st, your bank has 60 days to determine if they'll give you forgiveness. SBA, should your bank refer it to SBA for a double check, there's 90 days. So that's 5 more months. Well, now, you know, you're eating into that period of time. So that's going to be interesting to see how they handle that, because it could mean that repayment period is really condensed. However, I do suspect that many people will find so much more of their loan is able to be forgiven, that there's going to be some rare cases that there's some percentage that's not forgiven, but it's not going to be this big dollar amount like we were concerned about before.
I know we only have 5 minutes left, but we still have a few more questions here. The loan calculation was based on full salary expenses, but many staff are covered by grants.
Yeah, has been really an interesting situation. I would talk with your grantor agency and just to see if there's any way that you can change your budget. It makes it difficult because in theory, if you get reimbursed by the PPP loan, you don't have those expenses to apply against your grant anymore. So I think the person that you want to go to is your grantor. And if they are facing the same question from every single other person that they granted money to. So, we want to figure out how that's going to work. Also, Pano on tomorrow at lunchtime is having a seminar with somebody from the Department of Health and Human Services in Pennsylvania. I think it's DHS in Pennsylvania. So DHS does a number of these budgets where some of your salary might be included. And Pano is doing these free town halls. So Pano is the Pennsylvania Association of Nonprofit Organizations, and we will get the link to that meeting with you, this town hall meeting, because that would be a really great question to ask in a town hall type environment, just to get a sense of not just what your funding agency is doing, but what other funding agencies are doing.
And for our last question, I think I've got all of them from your original registrations. What do you think the chances of forgiveness are?
As long as you can keep your head count, they should be pretty good, because you figure the amount of money that you got was based on your 2019 payroll, and it was based on 2.5 months of your payroll. So let's say maybe 11 weeks of your payroll is in there. So if you maintained your head count and your pay, now you have 24 weeks to spend what it used to take you 11 weeks to pay. So in that quick and dirty calculation, solely on payroll, forget utilities, forget rent. If you maintained your head count, you're still paying your people the same amount of money. It really, it's highly likely to be forgiven. This legislation is not intended to be like a gotcha. So by and large, with each change to this legislation, it continues to reinforce the government's goal to get America up and running again, to get nonprofits running again, to get people back to their jobs. So they're doing the best that they can, even though it's been incredibly confusing and it's been very frustrating to deal with the politics and have to wait for them to decide this. But most of the decisions have continued to be in the employers and in your employees' favor. So I'm not expecting that there'll be some sort of weird gotcha legislation that comes up, and right now you're sitting here thinking, oh good, I'm going to get it forgiven, and then some weird thing comes up and all of a sudden you're finding out it's not.
Okay. And our last question is, will we be having a webinar on the Family First CARES Act?
If there is enough interest, pop it in the chat box that says, yes, I want this webinar, and we can certainly do that. I really didn't spend much time talking about if you have employees that are home and you're paying them 2/3 of their pay because they're caring for their children. That part you're getting reimbursed by your employer share of FICA and Medicare, your 7.65%. They don't count towards all your FTEs, and I did not dig into that. There's all these little angles off to the side, so that's why I really emphasize, I thank you so much for attending, and it's so good for you to attend these different sessions, attend this one, attend other ones, but at the end of the day, if you're one of our clients, you want to make sure you check with us. If you're not, make sure you check with your accountant, because this is, as you can see from this presentation, it's incredibly intricate. Thank you all for attending.
Thank you very much. We will stop the recording now, and we will post this on the catalystnonprofit.com website under the resources. Thank you.